Welcome to This Week in Money. I'm Jim Goddard. Today, Charts and Markets CEO Ross Clark looks at the movers and shakers in the markets over the past week. Martin Armstrong, founder of Armstrong Economics, talks about tariffs, bonds, energy, and bank bailouts. He looks at the economic situation in Europe and how that might affect markets on our side of the pond. Ed Steer from EdSteerGoldandSilver.com comments on the latest from the Gold Antitrust Action Committee and how market manipulation is keeping gold and silver prices artificially low. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. We'll talk to Ross Clark right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com. Welcome back to the show, Ross.
Pleasure to be with you, Jim.
Ross, a week on the markets that saw gold take a hit, but does that mean there's an opportunity to make money on it?
Well, we're thinking that there is. Now, it might be a short-lived item, but the degree of the sell-off that we've had from basically it's a couple of raves of selling. You've come from 1360 in April down to 1290, a small bounce to 1310 was the top of that rally. And then this next wave down took us to 1245. And as of the middle of this week, we put out a piece because the indicators that we use started just as we moved through 1260 to produce some pretty good oversold readings. A couple of independent systems that we look at coming up with the same type of setups, and we've seen them in the past. They generally will result in one of two styles of a turn, either a V bottom, like we saw in December of last year or December of the previous year, or a bit of a rounding bottom. Now, if it's a V bottom, we probably get a pretty steep reaction back up into the 1280-ish range, back to where we just recently broke down from. If it rounds out, probably more labored move up, not quite as strong, and then I think we still have another wave of selling. And, all of this comes about because the U.S. dollar has been making a change. The dollar index had that exceptionally good move off the late March, early April bottom down at 89 on the index. And it's for the last 3 to 4 weeks now, it's been having trouble at 95. It got there initially, backed off a week or two later, marginally higher high, and then this week did the same type of thing. So the big momentum off the bottom is gone. The more labored move is here. And I think you can have a pretty good correction in the dollar index. It's 94.25 at the end of this week. Probably gets down into the 91.5 to 92 range. That would allow for the precious metals to rally back. But I don't think we've seen the top of the run for the dollar. I think this is going to be a correction and then another run up. So you probably got another leg down in gold after this move. And some of the stocks have been jumping out. Newmont had good buy signals in the middle of the week and showed some life towards the end of the week. So it's a tradable rally probably for the nimble investors, but I think for the longer term ones, they might be looking for a more sustainable, better looking base right now.
Is oil going to go up? Some pundits are saying $80 oil is pretty realistic.
Yeah, well, I guess, we've got issues now with the oil sands and probably a month or so of reduced production out of there, and I had been looking for the correction to 64.25 to either have one more leg down to 60 or reverse back to resistance, and at 74.25 to finish off this week. It's probably getting ahead of itself on the upside. It's been pretty impressive half a dozen days right now, and where the top is, I don't know, but I would be surprised to see it have a lot more momentum right now. To keep up the pace that we've had this week, I just don't see that in the cards.
Will the Canadian dollar pick up if oil goes up in price, or will the tariffs pound it down?
Well, the tariff thing, that's still, we've got an announcement on Friday of just what Canada is going to fight back with in the way of tariffs, but this is still, it's day after day and tweet after tweet as far as things are going with Trump, and so I think it's all part of a big negotiating play right now. And hopefully, we just don't end up with this escalating into a major tariff war. If it does, Canada's not going to come out of it that well. We had a good bounce at the end of the week. There's probability here now that we are going to have a July rate hike in Canada, and that definitely put, from Polos's comments, that's put a bid underneath the Canadian dollar. But it's still very, very much underperforming what we've been seeing in the commodity sector and in the oil market. So, we're probably looking at maybe another cent and a half in terms of the bounce in the Canadian dollar, but the trend is to the downside, and that's the way we should be thinking about it.
Is the Canadian dollar doing well, though, compared to other foreign currencies when you compare them to the U.S. dollar? I think the pound is down 20 cents over the last couple of weeks.
Well, the pound has been down, hit very hard. The euro has been down, but it turned the corner at this week as well. We're probably more matching the Australian dollar than anything else, and that would make sense. We've got the same type of products that we sell. They have a better chance of selling them into Asia than we have of getting our product past the West Coast. So it's for Canadians. I think. It's got a bit of a reprieve here relative to the European currencies, a minor amount, but don't look for it to continue.
Ross, have a great Canada Day.
And the same to you and all the listeners.
My guest has been Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Coming up, Martin Armstrong from Armstrong Economics next on This Week in Money.
Always consult your investment professional before making any investment decision.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799. I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martin Armstrong, founder of Armstrong Economics, available online at armstrongeconomics.com. He's speaking to us from Florida. Martin, welcome back to This Week in Money.
Well, thank you for inviting me.
And happy Canada Day and happy Independence Day.
Well, we're not completely independent, but,
Do you see the Dow hitting 40,000 points or higher ahead, or is it going to fall out of the sky?
No, look, we're still in a consolidation period, but longer term, I mean, we're looking at the Dow going, much higher. And mainly it's based upon the simple fact that the amount of money in bonds versus equities is about 10 to 1. And, everybody looks at the Dow and everything else and say, oh, well, the stock market's overvalued or whatever. But, historically, sometimes it flips back and forth. Sometimes it's the governments that go bust, and other times it's the private sector. So everybody always remembers the last war, which was 1929, but they forget the one before that, which was when all the sovereign states started defaulting. And we're back to that again. I mean, just look at like Illinois and California, and I mean, you have Ontario. Everybody's in trouble. The governments have basically, they've negotiated with themselves to give themselves fantastic pensions. So they're just bankrupting everything. They just keep raising taxes to really fund themselves, and that's what's going on. And externally, you have all the emerging markets have effectively borrowed in dollars because it was cheap, and they didn't realize that they had a foreign exchange risk. I mean, Canada right now is basically looking at banning the provinces from borrowing any more money in dollars because, they saved a lot of money in interest, but, now the dollar has been rising dramatically, and they're on the verge of going into default in some cases. And we're going to see a lot more defaults, going into 2019.
Do you expect the U.S. dollar to continue to strengthen?
Yeah, because there's just no alternative yet. And I think we're going to end up with a monetary system reset. But back in 1985 at the Plaza Accord, it was the U.S. that pleaded with Europe to create a single currency to compete with the dollar to stop it from going up. And, they created the euro, but, they never consolidated the debts. They argue amongst each other, and they want to pretend they're a one, economy, one currency, but they're just not. And so it's like, oh no, we can't. I mean, even if you look at the issue of bailing out banks, why have we gone to bail-ins? Because in Europe, they go, oh, well, gee, if we have to bail out the banks in Italy, that means money from Netherlands and Germany will have to go to support the Italians. Oh, that's not acceptable. So that's what I mean, that it's never been the euro is just, it's a facade. There is no single economy. They thought that they could create something, that all they had to do was create the currency. And there's a lot more to it than that. And they just have never been able to seal the deal.
Could you see Italy trying to pull a Brexit on their own?
Yeah, I mean, the people I speak to there in the Italian government, I mean, their view is very clear. And the way they've expressed it to me is that they feel like they're an occupied country. They're forced to take migrants that they don't want. When they said, well, we'll send them north, they said, no, we'll block the border, you can't do that. They said, well, we have to subtract from our EU budget what we're paying these people, and then Brussels says, oh, no, you can't do that. I mean, it's nothing that there is no benefit to the Eurozone whatsoever for Greece, Italy, Spain, Portugal. It's just not. They're being dictated to by the North, and their economies just were never acceptable, basically, for this entire type of system.
Could you see a North Euro and a South Euro?
No, I mean, I really, the problem is that, I mean, Germany was supporting the euro. Why? Because it's an export economy, all right? The bulk of what it produces is exported, like cars, etc. It has focused on an export model rather than a domestic model. So therefore, to them, a single currency would be good, because then what would happen is that their car companies would not have foreign exchange risk. So they thought it would expand their economy. But then when he said, well, gee, we're going to have to bail out Greece, oh, no, we can't do that. So that's what I mean. You want to be kind of like half pregnant. You want a single currency, but you don't want the responsibility of a single currency. So I don't see it as a north-south euro. I just see it as basically collapsing.
What do you see ahead for interest rates in the bond market?
You know, we're looking at interest rates just rising dramatically. The quantitative easing by the European Central Bank has been an absolute nightmare. They've been subsidizing effectively all the governments, and that's really all that's been going on. They're not stimulating the economy. 10 years of quantitative easing and nothing's happened. It's because all they're doing is they're buying the bonds of these of the various member states. That's all. So the money's not going down to the actual people. It's basically supporting the governments, and they have not reformed. And you're going to see now, if the ECB actually ends up stopping, like they claim they're going to, interest rates have nowhere to go but up. I mean, pension funds, and we have major pension fund clients. How can they buy a 10-year bond at 1.3% or even 3% when they need 8% to break even? I mean, it's just not even plausible.
Is it time for gold and silver to finally shine?
Not yet. You have to realize that, I mean, all the various sales pitches and quantity of money and all that stuff, it's been said since the 1970s. It just doesn't work. It's nonsense. What makes gold go up is when the average person questions the validity of government. We're getting to that point, all right? And they're suddenly going to wake up and say, wait a minute, everything is really screwed. That's when gold will develop. There's no quantitative model with inflation and quantity of money and all this other kind of nonsense people keep putting out. You know, it's amazing, but, you know, they just keep saying the same thing over and over again. Nobody says, well, have you ever been right?
We'll have more with Martin Armstrong when This Week in Money returns.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Martin Armstrong, the founder of Armstrong Economics. Martin, if President Trump makes a deal with Iran, will the war premium in the price of oil disappear?
No, not really, because it's not really there just yet because of the war premium. I mean, Venezuela has been effectively, its exports have been declining dramatically because it's in a socialist revolution that the government keeps trying to suppress the people. Most people don't realize that Venezuela was actually the largest, producer of oil, not Saudi Arabia. So, I mean, there's a lot of different, problems going on, but I mean, oil is not going to go back to, over $200 or something. I mean, there is war coming most likely in the Middle East. I mean, but what's driving it is more than people surmise. It's not really just Trump. I mean, there is an ongoing battle that's been taking place for decades now, and that's between the Sunnis and the Shiites. I mean, the Shiite regime in Iran believes that the church should run the state. And so they're against kings, like in Saudi Arabia. So it's a philosophical, disagreement. And it's kind of like the English Civil War between the Protestants and the Catholics.
What is a panic cycle, and do you see that happening this year?
This year was basically our first target for a panic cycle, and that means you basically test both sides of the market, and which we've been doing. We put out a forecast at the beginning of the year and said, okay, fine, look, a January high means consolidation in this thing through the summer. So, we still see the market, testing further to the downside, probably into July, but, this is it. The market is at a stage where people are just simply trying to decide what's the future going to be. And will the bonds crash because interest rates are going to rise? Well, then if that happens, then where you put your money? Some people can buy gold and stick it or put it in a mattress, but institutions can't do that. So you're looking at, where does the big money go? It's been largely, moving into equities. Although the Dow looks like it's down, for the past 11 days or so, the Dow has been going up. So from a foreigner's perspective, have they broken even on this recent decline? Yeah, they have.
Is the Trump revolution hitting Canada and Mexico?
Yes. They call it the Trump revolution, but effectively we saw the same thing in 1933. And in 33 you had Adolf Hitler come to power, you had Mao come to power, and you had FDR. It's the economy that drives this stuff. And effectively what you're reaching here is a point where, they just had the primary election in New York City. And a 28-year-old girl who's never been in politics overthrew the leading Democratic candidate who was expected to be the Speaker of the House if the Democrats won. It's not a particular philosophy, and that's where people are going wrong. They keep just blaming Trump, and Trump, and he said this or that. This is not the issue. Trump has won effectively against 17 career politicians. You see the same thing in Malaysia. You see the same thing in Catalonia, in Italy, Brit exit. It's global. You get the same thing going on in Mexico. It's whoever is in power is being thrown out. So it's not really a left thing or a right thing. It's like politicians have essentially just lined their pockets since World War II. The corruption is just pervasive. Hillary can write her books and run around and say, blame everybody. But, when they left the White House, the Clintons stole a couch. Congress had to have a little investigation on it, and then they said, oops, sorry, we'll take it back. If you go to a hotel, you might take the soaps and the trinkets there that they give you. Do you take the bed? It shows something to do with character. And you're just talking about career politicians. They have no character whatsoever. It's like they've been stealing for so long, and they're dumbfounded that people are suddenly getting angry about it.
Is President Trump likely using art of the deal techniques to win trade wars?
Oh, absolutely. That's what he's good at. All this, he's going to create protectionism and all this stuff. Look, he knows to a large extent what he's doing. And second of all, I disagree with his particular idea of protecting jobs with tariffs and stuff like that. This is part of the old way of thinking, and every politician has done it since World War II. They don't understand it, and they've been arguing over, trade. That's what the Plaza Accord was about in 1985, to lower the value of the dollar for trade. It's always been about trade. And they don't even understand their own economic statistics, because the entire system was based upon a fixed exchange rate with when they established the IMF and everything at Bretton Woods. Now, that made sense. You don't have somebody at the docks carrying a number of BMWs or Toyotas coming in. If you spent more money, it meant you bought more of them. That was it. Well, now the currency floats. So we allocated trade. We just reassessed it and said, okay, fine. We're going to allocate trade according to the flag the company flies, regardless of where it is. The U.S. has a $1.4 trillion trade surplus. You know, if you want to count Apple or whatever, I mean, then all of a sudden they're bringing their money back because of Trump. So it depends upon your definition of trade. But I mean, he is likely to end up in more of a trade war because as the dollar goes up, the current account deficit will basically expand, and he'll take that as a failure in trade and get tougher about it.
We'll have more with Martin Armstrong next on This Week in Money.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Martin Armstrong, founder of ArmstrongEconomics.com. Martin, should Canada welcome President Trump's idea of no tariffs, no barriers, no subsidies, when Canada would get access to the U.S. market with 10 times the population?
Look, absolutely. I mean, but it's not, everybody talks about trade. All right, what's the other side of it? Yeah, you put on tariffs. Okay, we're going to protect jobs. That means the consumer is paying more. All right, free trade really means the consumer should be able to buy whatever it is at the best price, regardless of who makes it. All right, and I mean, back in the mid 1800s, David Ricardo, and you can Google it. I mean, he argued that every country should work on what is called a comparative advantage. Do you grow heads of lettuce in Vancouver, or do you grow them basically down in Saudi Arabia and cost $10 a piece? I mean, it's better to buy them from the United States or Canada and import them rather than spend $10 to create one in the middle of a desert. I mean, it's called comparative advantage, and the consumer basically should be allowed to make that decision, not politicians.
With Prime Minister Justin Trudeau in charge, are you bullish on Canada?
No, he basically is another clueless type guy, honestly. I mean, my concern really is what comes after Trump, because there is nobody in the political circles that has a clue as to what's going on. And I don't care what country we're talking about. I mean, they've grown up basically wanting to be leaders of countries, etc. What is your qualification? I mean, they have none. They really have none. And that's our whole problem. I mean, if you go to you need brain surgery, do you talk to a cab driver and say, "Oh, you look nice, you smile nice, would you mind operating on, I need brain surgery next week. Could you do it?" I mean, it's absurd. But when it comes to politicians, oh, he looks nice, oh, he sounds nice. What has he ever done? Do they even understand the economy? They don't. They have no clue.
Martin, the two most important jobs probably that there are in the world are being a parent and running a country, being a politician, running a city. And they're the two jobs that you don't need a certificate or a university degree or a license to do. Isn't that interesting?
They're basically, when it comes to the politicians, you basically, it's like a used car salesman. You can sell a great idea that sounds nice. And this is why the Democratic Party, we've posted charts. If you plot the number of seats on a percentage basis that the Democrats had, all right, they peaked with FDR right after the election. So effectively back in 1933, they've been declining ever since. So, this idea, vote for me, I'll steal it from this guy and I'll give it to you, it's been going on since the 30s, and it's wearing thin. The youth basically at this point know that, like, Social Security in the United States is not really for pension. They keep lowering and lowering and lowering. It's just a tax. That's it.
Is the carbon tax scam being exposed?
Look, we've published charts on it. There's been over 30,000 scientists who have signed a petition that global warming is just complete nonsense. Wall Street Journal recently did an article on it and took 30 years of global warming forecasts and shown. We haven't even remotely reached even their minimum targets. It's a natural cycle. This is it. We're now, the sun peaked basically in 2015. It's turning down harder than ever. We're still snowing in Newfoundland just a few days ago. In 8 states in the U.S. it's been snowing.
Martin, I have a simple question. How can a carbon tax stop volcanic eruptions, changes in the Earth's orbit, and sunspots and asteroid hits? How does that? It's
just a way for politicians to raise more money. You can read a book. I think it was, it's called The Year Without a Summer. I think it was 1814 or 1816 when Krakatoa went up.
Yeah.
It was one of the biggest volcanoes. It blew up so much ash into the atmosphere. It was still snowing in July in New York City. Our danger is that we're in now an upward draft of volcanic eruptions, and for some reason they correlate when the sun energy declines. Volcanoes basically, start perking up. We have 3 of them going on right now, so what's happening is that the more that develops, we're more at a risk of changing climate, true, but too cold, not too warm.
Is growing civil unrest likely in the U.S.?
Yes, it's rising pretty much everywhere. There's been, it's quite amazing, but you take the left who against guns and all the rest of the stuff, they're also the ones who preach violence. You had Kathy Griffin holding a severed head of Trump that's all bloody on TV, and then in the next breath, we should outlaw guns. But, you have Peter, Fonda coming out saying, let's put Trump's son in a cage. I just don't understand this. But it's, more than it's reaching to the point that 60% of the people now expect violence coming from the left, from anti-Trump supporters.
Is President Trump cleaning up the justice system?
No. It's so far gone, it's ridiculous. But, when you start interpreting things based upon your political philosophy, it's kind of bad. And that's why actually Benjamin Franklin had proposed that only lawyers should nominate the judges, not politicians. And he was absolutely right. But when politicians do it, it's like, okay, fine, I want you to vote this way, that way, whatever. Oh, okay, fine. So they're already prejudiced from one side to another. They various, they do change over time, but that's simply the way it is.
We hear President Trump is going to make changes to Dodd-Frank. What changes would you like to see?
Oh, most of the Dodd-Frank recommendations were completely bogus. The idea, what they have done is basically they put in all kinds of regulations, etc., which have reduced the amount of banks getting involved in any proprietary trading. Now, the problem with that is that the more people that keep withdrawing, the higher the volatility is going to be because the markets have become extremely illiquid. I mean, Japan and in Europe, there's virtually no bond market. The governments have destroyed it. You had the Central Bank of Japan brag that they bought 97% of the government bond auction. Now, do you think this is good? You're basically saying that's almost, like, okay, fine, well, there is no private sector because we own it all.
Well, in Europe and in Japan, they had negative interest rates. Why would you buy a bond that cost you money in the long run instead of making you money?
Exactly. I mean, it's absurd. And, people are always bashing the Federal Reserve and, the dollar's got to crash. The Federal Reserve basically stopped the quantitative easing some time ago. They started raising interest rates back in 2015. And they have publicly stated that whatever bonds they bought mature and they will not reinvest. The ECB has realized that it can't even do that. So any bonds it's already previously purchased, when they expire, they have to renew them because there is nobody to buy them.
Are we likely to see the deep state exposed and charged with crimes anytime soon?
I wouldn't say anytime soon, no, but I mean, it is part of the awareness of corruption that's taking place. I mean, you saw really major protests even in Romania against the corruption there. I mean, Malaysia, they just threw out the prime minister. I mean, it's pervasive. It's absolutely pervasive. And this is why Mueller, et cetera, and a lot of the others are so intent on trying to getting rid of Trump. Trump is their greatest threat. They want a career politician, all right? And because a career politician will never upset the boat. They know the game. And they stand up and they get people all riled up on the social issues. You had all the women out there protesting against Trump, No president, I don't care who he is, can outlaw basically abortion. It's already been decided by the Supreme Court. It's like saying, okay, fine, you're black. No, you can't have a job because you're black. These things have been decided. Nobody can stand up and do that. So it doesn't really matter from a realistic perspective. If you vote for somebody because he's against abortion or against, for it, against it, whatever, because they can't do anything anyhow. But it keeps everybody distracted because in my near 40 years experience in working with politicians, people ask me, gee, are you Republican or Democrat? And I tell them, I say, I'm neither. Because when it comes down to the money, it's both of them. They have their hand out and it says, just show me the money. That's it.
How are global real estate markets looking?
It's the real thrust into them is basically over. The biggest problem with real estate is that governments can tax it, they can regulate it, they can do everything and destroy its value. And anything else you basically can pick up and move offshore, be it bond investment, equity investment, etc. The two things that you cannot export, all right, to save it, is real estate and your labor. If you want to protect your labor, you have to leave. That's it. Capital can always export and move away from onerous, legislation. But real estate and people's actual ability to work, you can't move the real estate. Somebody can get on a plane and go get a job someplace else if they even allow you to migrate under these conditions.
Is credit starting to be constricted around the world?
Yes, definitely. It's clearly small businesses in particular. Still, we're looking at in excess of 70% cannot get a loan. Everybody, the banks, they just want to lend if you have 150% collateral. That's about it. And nobody ever wants to take a risk. And when it comes to the average consumer, they love, funding the credit cards at 20% interest.
Is China's built on debt economy in trouble?
Oh yeah. I mean, everybody, it's more at the provincial level. a lot of the provinces went out and they gorged themselves on debt, and worst of all is that they use dollars to borrow in. So that they're getting killed on the foreign exchange as well as the interest rate.
Have cryptocurrencies had their day in the sun?
Pretty much. You've had all these various governments instructing banks not to facilitate ways for people to deal with them. So you're seeing it everywhere from Singapore to Britain. You can't use your credit card to buy cryptocurrencies. It's a great panacea sales pitch, but it has zero chance of becoming a world currency. You're not going to displace all the banks. You're not going to displace basically the governments. They're the ones with the tanks and the guns. You really think they're just going to lay down and say, "Oh, okay, fine, you're right. Yes, here's all the power. We surrender." It's just not going to work that way. It's never happened that way in history, ever.
Martin, what's the latest on your movie, The Forecaster?
I think it is now available on Amazon in DVD. Netflix wouldn't show it because of the blacklist from the United States. But they are, pressing ahead, and they want to make a Hollywood movie out of this now. So I've looked at the script, I've seen it, and they're running around in Hollywood now. I mean, they're looking at various different directors and a cast. I mean, so it is there at this stage in the game because I think it's probably the perfect time. I am going to go over to Germany to do a second one, but it would be more of a one on the world economy and the fate of Europe and why the monetary system is collapsing, etc. But that's going to be another movie I'm supposed to go over in August, and they're going to start filming that. So, look, the more we can do to at least get the average person to understand what the real problem is, the better off we'll be.
Martin, how can people find out more about Armstrong Economics and your subscription services?
Just go to our website. It's armstrongeconomics.com. You don't have to register or anything. We keep it as an open source and largely for public service. So we put a lot of stuff on there. It's absolutely free.
Martin, happy Canada Day, happy Independence Day.
Well, thank you, and the same to you. Let's see if we can actually get independence going one of these days.
My guest has been Martin Armstrong, founder of Armstrong Economics at armstrongeconomics.com. He was speaking to us from Florida. Coming up on This Week in Money, Ed Steer from Edmonton.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Edmonton. Happy Canada Day, Ed, and welcome back to the show.
Thanks very much, and happy Canada Day to all your listeners as well.
Ed, taking a look at the gold and silver markets, how is the gold market doing right now, and is it oversold?
Well, I can tell you right now it's hugely oversold, and the conditions that we're seeing right now, This all started 2 weeks ago today when the bullion banks led by J.P. Morgan Chase stepped into the market 2 weeks ago on a Friday afternoon and dropped the price by a huge amount. That was not just gold, but all the precious metals. And they've been picking away at it ever since, and right up until the COMEX close yesterday, which was the day that the July contract went off the board. So they were trying to shake loose as many managed money traders as they could and go long and cover short positions themselves. But the market is hugely oversold, and we're going to see a rally here of some size. And the indications are, just looking at the charts this morning, that it's already started.
How does the sentiment look for gold and silver?
Well, right now, of course, it's the worst it's ever been. I've been at this now since, 2000 or 2001. And, the sentiment has actually never been worse than it is today. Even going back to, when we were at the bottom of the market, when gold was $500 an ounce, the sentiment was far more positive then. And we're sitting at $1,272, but the price has basically gone nowhere since 2008, and everybody's down in the dumps. So the sentiment is lousy, but this is the exact time that everybody should be piling in on the long side, is when blood is running in the streets. And I think that certainly long before the year is out, the sentiment will have changed, completely reversed, and things will be looking very positive for the precious metal sector.
Are gold and silver stocks showing any sign of leading the metal prices higher or lower?
I'll tell you what, there was a time when people would say the stocks always led the metals, but in this day of price management, which has been going on for, a couple of generations now, 30 or 40 years, that truism no longer applies. If you look at what's happening today, I would say that, when the gold and silver prices rise, the stocks rise, and when the gold and silver prices fall, the stocks fall. So I would say they're in sync with each other, because the market sentiment is so bad, nobody wants to make a move to buy or sell anything until the price does something. So I don't think we're going to see the stocks lead the metals until we're in some sort of bull market of some kind where people are anticipating higher prices, because right at the bottom where, like we just discussed, sentiment is lousy. People aren't making it a move unless they absolutely have to.
If there's a market downturn, do people sell off their gold to pay off their margins and then look at gold afterwards?
Well, there's a certain amount of that, that's for sure. It happened, 5 or 6 or 10 years ago when gold really got hammered after it got up to about $2,000 an ounce. And the markets crashed in 2007, 2008, and 2009 with the financial crisis. There was a lot of selling of anything that remotely smelled liquidity and or profits. And, of course, the precious metal stocks, the precious metals themselves were prime candidates. There was a lot of that going on back then. But I can tell you right now, with the market sentiment being what it is, I don't think we're going to see much of that, even if we do get a downturn in the market. And as you know, the Dow's down quite a bit in the last couple of months. But the precious metal stocks, even though the gold price and silver price have been hit hard, really haven't been echoing that fact. So I would say the precious metals stocks are hugely oversold, and the sentiment is very bad. So I don't think they're going to follow any market move down anytime soon.
Ed, how are the latest commitment of traders numbers looking for gold and silver?
Well, actually, the commitment of traders report as of last Friday was very, very positive for gold. And we'll just jump over silver for a second and go to platinum. The managed money traders, the dumb money, the ones that follow the moving averages, are the shortest they have ever been in the history of the metal. They are just piled onto the short side like you wouldn't believe. Palladium is also set up in a very bullish manner, but it's a very small market. Silver, if you just look at the raw COT numbers, it's not bullish at all, but if you look under the hood, the managed money traders have absolutely refused to sell their long positions on this price decline since it started 2 weeks ago. So they're still hugely long, and if there's hugely long back then and prices are down, $1.30 an ounce over the last 2 weeks, they're probably not going to sell. So as far as I'm concerned, and as far as Ted Butler's concerned, who follows this thing very closely, if they're not going to sell, if they haven't sold now, they're not going to sell. So the market set up in silver appears to be equally bullish. We're loaded for bear for a massive rally in the precious metals if J.P. Morgan and the boys decide they want to let it happen.
Should a person take a look at buying gold and silver coins right now?
Well, it's like buying stocks. If you're going to buy something, you buy it when blood's running in the street. When the sentiment is lousy, when you don't want to spend the money, no, I don't want to buy a gold or silver stock. You're sick of them. You're tired of them. You just don't want to touch these things. Those are exactly the moment that you should be out there buying everything that you can possibly get your hands on. So my answer is absolutely yes to not only the precious metals themselves, but also to their equities.
Are rising interest rates likely to affect the price of gold and silver?
Not at these rates, they're not. I mean, we're talking, 1 or 2% interest rates. I can tell you right now that any interest rate rise we see in the foreseeable future is not going to have any impact whatsoever on precious metals. They're going to go up and away regardless of what interest rates are doing.
Are trade wars or the threat of trade wars likely to affect the price of gold and silver?
Well, under normal circumstances, where there was a free market in precious metals and all other commodities, you would certainly expect that gold and silver prices would be rising on this. But as you know, they're not, and the very reason is that the bullion banks of the world, which I've already discussed several times here in the last 10 minutes, the bullion banks just aren't allowing them to reflect that reality, whether it be trade or any other thing.
Are currency wars likely to affect the price of gold and silver?
Well, the answer is about the same to this question as it was to the last one. I would certainly think that would be the case. The currencies and the gold are tied at the hip, but like I said, the powers that be don't want people rushing into the precious metals, so they try to disconnect one from the other. So if you see the dollar sinking like it is down big today, you would think normally that gold would be up big today. Well, it's not up big today, and that's because they don't want people rushing from the paper side of the market into the physical side of the market. So the answer to that question, like I said, is the same as the other one. As long as the boys don't want you running into physical metal, they're going to keep the price suppressed.
We'll have more with Ed Steer right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh shear zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer. Ed, could the hoarding of gold protect China from financial collapse?
Boy, that is a good question, isn't it? China's financial system right now, the whole world's a huge Ponzi scheme, but China is at ground zero of that. Their financial problems run so deep and so high that it's just impossible to tell. I can tell you, I don't know how much gold they got. Nobody knows how much gold they got. I would say they have far more than they're saying they do. But in order to save China's financial system or its currency or whatever, the gold price would have to be at some fantastic price. And the answer is, I don't think it's going to save them in the long run, no.
Didn't the Canadian government sell off Canada's gold a long time ago?
Yeah, that was done under Mulroney's reign. They sold a whole bunch of gold off, and it's my belief that they did it in order to bring down, it was part of a scheme to bring down the Soviet Union, reducing price of oil down to, what was it, $10 a barrel or $8 a barrel, and gold down to $300 or $400, because at that time, way back then in the early 80s, gold was at $900 or something like that. And but Mulroney, followed by Chrétien, sold off all of Canada's gold reserves. We had a little bit left. I think we had some gold coins from the early 1900s floating around. And my understanding is almost all of those have been melted down as well. So, Canada may have a few bars sitting around in the central bank's vault, but basically the cupboard is bare.
For Canada, does gold in the ground count as wealth?
Well, it doesn't count as wealth in any other country. I mean, take a look at South Africa. I mean, they got lots of gold in the ground, or Australia or whatever. I mean, nobody's counting their gold in the ground as being money in the bank. Russia's got huge reserves. Canada's got huge reserves. So does the United States. And even if you've got gold sitting in the vault, it doesn't seem to be making much difference these days. So, until, like I said, I'm going to go harp on this again, until the banks allow gold to regain its rightful place in the monetary system, gold even in the vaults isn't going to matter much.
We hear U.S. treasuries are being sold off by foreign countries. Why isn't gold reacting?
For the same reason I just said, and I'm getting tired of repeating this. They don't want, the boys don't want precious metal prices to react to any financial or economic or monetary news that's perceived to be bad. I think that, having said that though, I think the fact that Russia, and especially Russia, sold off half of their foreign treasury or U.S. treasuries a month or so ago was certainly a warning sign that the foreign governments aren't going to be buying up the amount of treasury debt that the U.S. is going to be offering anytime soon. And it's only a matter of time before we're going to see a big increase in the gold price to reflect the fact that people just aren't interested in buying any more paper from the U.S. But as to when that's going to be, I don't know, but I get the distinct impression it's going to be rather soon.
How has the HUI, the Gold Bugs Index, been doing?
Well, like the gold price and everything else, it's been doing lousy. It's I don't know what it is. It's under 200 someplace. And until precious metal prices rise and gold prices rise, the HUI is going to founder just like everything else. But I'll go back to what I said before. If you're thinking of buying the precious metals, this is exactly the time you should be doing it, and the HUI would be one of the places I would start.
Has the XAU, the Gold and Silver Index, been mirroring the HUI?
I'll tell you what, Jim, I don't follow the XAU at all. I would say that they're very close to each other, but they wouldn't follow each other exactly because the companies that are in them are slightly different. But the general trend would be that they would follow each other, even though they may not be a mirror image of each other. When the gold price goes up, they're both going to go up.
Do you expect the second half of the year to be better than the first half for the gold and silver people?
Well, I'm happy to say that I think that we're going to see gold and silver prices before the end of the year that are quite shockingly higher than they are today, like we were discussing in the Commitment of Traders report. It has never been more wildly bullish, and the bullion banks, especially over the last 2 weeks, have been carefully picking away at their short positions and getting them smaller and smaller. And Ted Butler has been keeping a special eye on J.P. Morgan, and they've been covering their short positions in gold like mad recently. And they've gone, in the last 2 months, they've made a concerted effort to cover as many gold shorts as they can. So they're only doing that for one reason, and that's because we're going to see sharply higher precious metal prices in the future, and not in the too far distant future either.
Are gold and silver prices moving higher in Canadian dollar terms?
Well, yeah, the Canadian dollar is, $1.32 Canadian for a U.S. dollar right now, so the gold price in Canadian dollars is 32% higher roughly than it is in U.S. dollars. Of course, as the currency values fluctuate, so does the price of gold in the local currency. I saw a story on GATA the other day that Chris Powell put up saying that, the price of gold in Iranian rials is up 300% in the last 3 or 4 or 5 months or whatever it is. So, yeah, if you own a local currency that's heading into the toilet, whether it be Venezuela, Argentina, Brazil, or South Africa, the only way to save yourself is to buy precious metals.
Is market manipulation a serious crime?
Well, I'll tell you what it's supposed to be. It's on the books in the United States government that market manipulation, regardless of whether it's the precious metals or the stock markets or the currency markets, is a serious crime, but they certainly look the other way when it comes to what's happening in the precious metals market. The big banks have been fined for LIBOR, and actually some of the banks have actually been charged and found guilty of managing the precious metal prices. But even though they get millions and billions of dollars worth of fines, nobody's going to jail over this. And it's a huge, huge crime, and until they either clamp down on it in the precious metals or start sending some of these people in the C-suites and the board of directors to the slammer, that's not going to change anytime soon.
What's new with the Gold Antitrust Action Committee?
Well, it's the same thing that we've been doing ever since Bill Murphy and Chris Powell founded it back in 1999, and that's getting the word out as best we can to everybody that will listen, whether it be at gold conferences or the news media or sending letters to central banks of the world, alerting to the fact that the United States is rigging the gold market. The Chinese and Russians certainly know about it, and we just continue in our work every day. I know Bill and Chris and myself on this interview with you are always getting the word out that hey, the prices are being managed, and it's unfortunate that the mining companies just aren't interested in pursuing this.
Ed, how can people find out more about GATA and also your newsletter?
Well, you can go to the GATA website, which is GATA, GATA.org, and my website is edsteergoldsilver.com, or just Google my name, Ed Steer, and my website will pop up, and they can go to the sample page and see what they get for their money, which I publish 5 days a week, and they get 200 plus newsletters a year and the freight on that is US $100 per year. So I consider it to be a great value as far as the precious metals commentary is concerned.
Ed, have a great Canada Day.
You too, Jim, and to all your listeners as well.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of the Gold Antitrust Action Committee. He was speaking to us from Edmonton on Friday, June 30th.
And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Martin Armstrong, and Ed Steer. And thank you for listening. If you have any questions for the show, you can send them to info@howstreet.com. I'm Jim Goddard. Now stand by for company showcase updates from American Manganese CEO and President Larry Reaugh and Aben Resources President Jim Pettit. Have a great Canada Day.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Larry, you're in Vegas at the Battery Conference. Did you get a big charge out of it?
Well, that's a good way of putting it, Jim. But no, I think it was well worth it for the company to have a couple of representatives down there. We were sitting on a panel. And so, we got to explain our process to a very large group. And but what was interesting, once again, we had meetings, and most of them were set up beforehand with a lot of big Asian battery companies and conglomerates, and not so much North American. So I really think that North America and Europe are way behind the curve when it comes to what's needed in the battery industry. And by that I mean, when you're talking about cobalt, lithium, it was a lithium conference, so actually the lithium was the centerpiece, but cobalt is definitely certainly a way ahead of lithium when it comes to scarcity. But just to put things into context, we have discussions ongoing whereby some of the joint ventures would look at stockpiling the batteries that we need to process. And that's always a question. But I find that when it comes to the Asians, they're the ones that bring it up. They want to know if we'd be interested in that sort of an arrangement. And of course we would. So at the same time, Bloomberg article came out about reuse. And so that was a big subject at the conference. And it just doesn't make sense when you stop and think about it. Here are the Asians beating the bush to look for somebody to recycle batteries. And in North America, it's all, we can put that off for another 10 years because we're going to reuse the batteries. Doesn't make sense. And so I think the Asians are much further ahead than the Europeans or the North Americans when it comes to where we're at in the battery industry. But other than that, Jim, it was a great show. We've got a good exposure for the company, and we've met a lot more people. We certainly have a lot of interest going forward, and I'm just waiting for the somebody's going to step up to the plate one of these days, and we're off to the races. And speaking of that, the markets are looking pretty crappy all week, and we finally got hit down a bit today. But, that happens. Nothing you can do about it sometimes. So, I'll be back in the office on Monday, or I guess Tuesday. It's a holiday up there. And I just wanted everybody to know that things are progressing. Work's ongoing in the lab. And we definitely will have a press release next week on the progress of that. And, it's nice and hot down here. It's over 100 degrees Fahrenheit. So that's a bit of a toaster. Anyway, I can't name names and I can't discuss who all we talked to, but there was a lot of representatives there from the Northvolt, which is building the gigafactory in Europe, and a lot of the big battery manufacturers, especially out of Japan, Korea, China, and we got another big meeting, actually with a big European group next week. So things are moving along. People have heard about us and liking what we have. That's all I can say, Jim.
Larry, for people who are new to American Manganese, can you maybe explain a bit about what you do?
American Manganese is a mining company with a critical metals mining company that has some technologies. We have a technology for treating low-grade manganese, and that technology is patented in the U.S. and China, South Africa, and Canada. We have a patent pending for recycling lithium-ion batteries because our chemistries work on that, and that's our focus at this time. We're listed on the Toronto Venture Exchange under the symbol AMY. We're listed in the U.S. under the symbol AMYZF. Frankfurt under the symbol 2AM. We have a lot of information where you can do due diligence on us at our website, AmericanManganeseInc.com, or you can phone me at 778 574-4444.
Larry, thanks a lot for the update and have a great Canada Day.
Okay, you bet.
I've been speaking with American Manganese CEO and President Larry Reaugh. Our conversation took place on June 29th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, President and CEO of Aben Resources. Welcome back to the show, Jim.
Thank you, Jim.
And happy Canada Day.
Same to you. It's going to be a long weekend.
Jim, you have some boots on the ground and some drills in the ground as well. Can you tell us about it?
Yeah, well, we just announced the other day that, 2 days ago, that we have now started drilling, which is a great milestone, considering that we're now drilling over a month earlier than when we started last year. So we can avoid some of the headaches of sending core to the labs, which were dramatically backed up because there was a lot of drilling going on last year at this time. Right now, there's a few of us drilling, not a lot. I think turnaround time in the labs will be a lot better. At least I'm hoping. And with the depth of the holes that we've got planned, possibly averaging around 250 meters, they shouldn't take long. We can put a bunch together and get them off to the lab pretty quick. We're starting in the north boundary zone. We're starting in an area that we discovered last year. We are going to be doing some step outs to kind of identify the extension, if there is one, but we're pretty confident there is, and we want to follow it for as far as it goes. And if we have success, maybe we can bring in another drill after another financing. But that all remains to be seen. But we're pretty confident, and I'm starting to. There's a little traction being offered now in some of these other companies. I was looking at GT Gold today; they're up 13 cents. So I like that. They haven't got any. They announced their drilling a day before us, so that's all good. It's nice to see that kind of reaction in the market, given that it's going into the Canada Day weekend as well as the 4th of July. So the weeks, the market gets kind of slow, but we could be the only excitement going for the next little while.
For people who are new to the Aben Resource story, can you give us a bit of a background?
Yeah, sure. Where we're drilling is in the northwest quadrant of British Columbia in an area called the Golden Triangle. This is an area that has a very unique geologic environment and has a very good history, going way back decades, to some tremendous success stories like Eskay Creek and Snip and Premier and a few others. And in more recent times, you've now got Red Chris, and you've got Pretium went into production last year, and some recent discoveries like GT Gold, and like to our right on our southern border is Garibaldi Resources. So, we're looking forward to it. I think we're in the right area for sure, and I think you're going to hear a lot about the Golden Triangle this summer.
Jim, where are you traded, and how can people get more information about Aben Resources?
We're traded on the TSX Venture under the symbol ABN.V, and in the United States on the OTC QB listing, ABN.V. And you can reach us here at the office, 604-687-3376.
Jim, thanks a lot for the update.
Anytime.
We've been speaking with Jim Pettit, Aben Resources CEO and President. I'm Jim Goddard. Our conversation took place on June 29th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.